Hey, what's going on, everybody? Welcome back to another pre-week market analysis video here with Corey Smith with CoreFX, presented to you through T3 Live. We do these videos here every week covering the foreign currency markets. We cover all the major currency pairs and the news events as well as technical analysis, what happened last week, what to expect this week moving forward, and just give you guys a little bit of a stance to get the week started. Cover everything in here from news to strong and weakest performing to, again, like I said, the technical charts and markups. So it's really your one-stop location to get all of the information you need for the trading week ahead for foreign currency traders. So today is December 16th, and this is for the December 17th week ahead, also covering the prior week before. And we're getting into the holiday month here. It's the second half of December now, which is typically not a good trading month. A lot of illiquidity in the markets. A lot of people take off for the holidays. A lot of big banks, big traders, all, put their business and trading aside and wait till after New Year's and start the new year off. A lot of positions being closed at year end, and really just not the best trading month in general. The last few weeks, I typically tend to stay behind the charts and stay trading, but I typically tend to not really look for trades unless it's, news events going on, or like this week I'll still look, but after this week I really am going to take a break until New Year's, because there's just no need to start or force any trades that aren't needed to be taken. And when we're in these slow weeks and the slow time of year here on the holidays, a lot of times people will make boredom trades, even though the markets aren't really moving and there's nothing going on. You'll see, if this is your first time trading through the holidays, that things really slow down, calm down. There's no real follow through on moves or strong moves, and people get bored and place trades in this time, and they end up losing more than they normally would, and they wonder why. And it's because the markets aren't acting normal. There's not much liquidity, there's not much volatility, not many people trading, so it's not the best time. So I recommend stay behind the charts, stay analyzing, stay working on your trades and working on your personal performance and all. However, I would recommend not trading as much, or even at all. But this is one of the last weeks I'll be actively looking for trades, so I'm going to go ahead and jump into last week for you guys here, and then from there we'll be able to move on to next week. So this past week, as you can see here, we had New Zealand dollar being the top performer, followed by the Aussie and Japanese yen. New Zealand dollar had a 2.25% move, so really strong move out of the New Zealand. This is the kind of moves we like to see. Over 2% move in a week is a good move in the currency markets. Australian dollar did 1.77% move, so that's another good move. And the yen just under 75 basis points, so 0.75% move. So not too much of a move there, but still top performers, we're still seeing some moves, so that is a good sign. The bottom three performers, not too much movement. The pound, euro, CAD, you'll see there's a lot of back and forth movements this week in the pairs. I got break-even trades a lot this week. I got a lot of trades I entered, went into profit pretty well. I adjusted my stop, and then I got kicked out at break-even. Really event-packed week as far as central banks go, and just mixed signals and mixed movements all across the board. But as you can see, it was a decently moving week. Starting with the analysis with the US dollar, price closed the week pretty much flat from where we opened. There was some strong moves, but it was kind of in whipsaw directions. We had strong rejection off this blue resistance here, which is a weekly zone. But price quickly reversed back up and ended the week back up into this zone again. So really not too much happened with this movement here. We're still at a critical area. What I'm seeing starting to form here that could possibly happen is we've got a little bit of a chart pattern here setting up. The right shoulder here of a head and shoulders pattern is forming on the US dollar chart. We're hitting this strong daily, weekly trend line here that you're seeing we're hitting here and rejecting off, as well as this very strong weekly resistance. So we could see the dollar roll over back down to test this neckline down here just below 93, or it could break this trend line and continue the uptrend, but we're going to have to wait and see. A lot of mixed signals we've been getting out of the dollar, so it's kind of tough to tell, but definitely have to wait and see how this week goes. Euro, exact opposite, kind of the same story as the US dollar. Closed slightly lower on the week, but still all around, it just moved sideways, chopping throughout the week. It's on very strong support right now where this red daily line is, and it could bounce off this support like we're saying with the dollar, or it could break lower and move under. We've got kind of a mixed case here. I see here an inverted head and shoulders, this same kind of pattern we're seeing on the US dollar chart. That could play out if this right shoulder forms. But I'm also seeing on a smaller time frame here, if we break it down to the 4-hour chart, come on. Sorry about that. But if we break it down here to the 4-hour chart, you can see we actually have a regular head and shoulders forming. So we have an inverted on the daily, and then what could be a regular head and shoulders on the 4-hour. Again, I like the higher time frames. They're stronger analysis, but here you can see the inverted head and shoulders a little bit better, as that could be what's playing out. But as with the dollar, you can see this has just been really choppy moves. Nothing too crazy. Until we have a break of this 114 to 113 range we're in here, we really have no clear direction either way. Moving on to the yen, choppy and range bound still. Did move higher on the week, but not much change in structure. As you can see, we started this uptrend, pulled back, thought we could have continued higher, but broke lower, then pulled back up above this support. So really choppy price action here. No clear direction. This could be a wave 1, wave 2, then maybe a wave 3 uptrend Elliott wave type of higher high, higher low we're getting here, but too early to tell really. Looks like a sloppy inverted head and shoulders potentially here too, but not the biggest fan of this chart, so I'm not really going to give any clear direction either way with the yen. The pound, on the other hand, we've still got in this uptrend moving higher below this strong resistance up here, but if you throw a Fibonacci level out, you can see the last move it made up. We came, hit this high, have sold off, and now this support falls on the 50% Fibonacci level. We got a little bit of a doji candle close here Friday, so really there's nothing stopping this technically from moving up to at least retest this prior high here on the pound chart. So I'm definitely looking to the upside out of the pound to start the week. CAD, I'm looking the opposite direction. As you can see, once we broke this uptrend, we had this lower low made, lower high, lower low, lower high, and the structure's held since then. So we had this lower low formed here, right? And we had this lower high formed here afterwards. And since then, both these structures have held. The lower low has been retested and held. The lower high has been retested and held. So we're range bound now here. But this is a bearish trend, and we are in a sideways bear rectangle now at the bottom of support. So a break below this could lead to a nice strong move lower. As you can see, it's got room to the downside, possibly to down the 75 area here. So we will be watching for further analysis this week, but I am aiming slightly down on the week to start with the CAD. Swiss franc. Another one that ended the week pretty much flat, slightly higher, but moved higher and hit this trend line right here that it broke, and then it came up and like slightly retested it. Also hit this 50 and 20 SMA and this strong resistance area we've got here, and it bounced lower. So we could even possibly throw a Fibonacci level here after this uptrend temporarily broke that trend line, came down, made this move, hit the 382 fib, and we're now rolling over. Possibly could continue back down to retest these lows, so we'll have to wait and see. This made a trend changing pivot low here, then a lower high, so we could continue lower, but again, not the greatest chart, not the most precise. I'm actually seeing again here, if you break it down to the smaller time frame, which is not going to cooperate with us, but as you can see here, we also have a little bit of a head and shoulders forming here as well. Not the cleanest, but potentially could be something else to keep an eye on. Nothing really too clear here, but I am leaning a little further to the downside, if any. Takes us to the Aussie. Very, very strong move this week. As you guys have been seeing these videos for the past couple months, we've been in a very nice downtrend. We've been really respecting these moves lower, lower high, lower low, lower high, lower low, lower high. We made this lower low, and I thought this could have been a continuation of the trend, but what did it do? Made this strong move this week, violating that downtrend line, breaking through the 20 SMA, hitting the 50, and finding resistance. So really hasn't too crazily. I mean, this broke structure, so we had a new higher high set right here. if you can see. So we could wait for potentially a higher low, either here or maybe a little lower, before continuing back up to this weekly level here, possibly. But it's a little early to tell if this was just a strong week and the downtrend is going to continue. It'll bounce off this 50 and 200 SMA, or if this was a trend reversal and we're going to start to see a stronger Aussie now to move forward. But all in all, we'll have to wait and see. But we did have a trend changing higher high here. Bounced off the 50 SMA. Structure was broken, but not really anything too crazy. It is going to take me away from necessarily looking for shorts, particularly in this pair, but nothing really too crazy has changed yet. We'll have to wait and see what the follow through is. And then New Zealand dollar. If I zoom in here for you guys, you can see on this chart over here, we had this strong support that we were on at the 68 level. Price failed to break it twice. We have a little bit of an inverted head and shoulders here. It was a falling wedge pattern as well in a downtrend, which is a reversal pattern, and it did break higher this very strong week. We broke out of the downtrend, broke this structure, broke these lower highs, set a new higher high, broke all these trend lines downward, and we now have a reversal. Again, with the Aussie, we'll have to wait and see if there's some follow through, if we get a little bit of a pullback to 69-ish before continuing higher, or if it just falls off and comes back down to the support, or what it does, and it could just open the week and continue to rip higher, but we'll have to wait and see. But so far the trend has reversed and we have seen this structure violated. We'll just have to wait and see if it follows through with it or just quickly reverses back to where we were. Okay, so that is going to take us over to our news events for last week. Pretty packed week again with the central bank, so I'm going to try to go through it fast. A lot to cover though, so bear with me. Starting on Sunday, not on the calendar here, but we had New Zealand announce their new Reserve Bank of New Zealand governor. Adrian Orr was appointed, the former deputy governor of the Reserve Bank. So this was seen as a very market-friendly choice. There was a lot of uncertainty around New Zealand's monetary policy with the new government regime taking over. However, this was taken, at least by the markets, very market-friendly as far as the New Zealand dollar monetary policy is concerned, because the New Zealand dollar opened the week with a rip higher, set the tone for the strong New Zealand dollar all week, and gave it a huge performing week, opening with Sunday's, well, really Monday in New Zealand, their news. Taking us to Monday. Out of Australia, we had the business confidence report, and it was a reading of 6, so it was down from last month's reading of 8. Shows the Australian economy still not fully recovered and lacking a little bit of confidence and everything. But we did have a risk-on move in the U.S. equities as they pushed higher on Monday. Tuesday, we had the CPI out of the pound, which is a great trading event, always pretty volatile. But CPI is still surging higher with 3.1% reading, beating expectations, continuing the inflation rise in the UK, which is getting a little bit out of control, but I think they have it. They're pretty sure they have it under control. It's the highest reading they've had in 6 years, and we saw pretty choppy price action in the pound from it. I took us next to the U.S. dollars producer price index, the inflation reading out of the producer side of the economy. Met expectations, not really much price action afterwards, and then we saw the U.S. dollar kind of sell off all day after. And U.S. equities were relatively flat, a little bit higher on the day. However, we did see Alabama in the U.S., the Alabama state senator race. The slot was open when Jeff Sessions got promoted to the Trump president's administration, and so the Senate seat opened up, and there was a showdown. And Republican running mate Roy Moore, littered with sexual abuse and minor sexual stuff cases. He actually lost the Alabama Republican Senate seat for the first time in 25 years to a Democrat. Doug Jones giving Alabama a Democratic senator for the first time in 25 years. This throws more doubt on Trump's administration being able to approve the tax reforms and the health care reform and the cutback on regulation and the fiscal spending, all this stuff, as there's another Democrat into the Senate that's going to vote against this stuff. So a little bit of a risk on fuel in the markets. And that's something, geopolitical events have been really influential on the market, so it's something we definitely want to cover. And then Wednesday we had the pound's job reports, the average earnings, and the employment reports. The wage growth met the 2.5% growth expectations, bumping up from 2.2% prior reading, so it's showing a pickup in wage growth, definitely happening in the UK. But the unemployment rate and the unemployed ticked higher and missed expectations. So initially we saw pound strength, and then it sold off in the U.S. Open afterwards. Then we had the U.S. dollar CPI reading, which met regular expectations, slightly missed the core CPI, which is excluding the food and energy because it's really volatile. This led to a weak U.S. dollar initially, about 30 to 50 pips lower, then moved a lot lower the rest of the day following the FOMC meeting. So this was Janet Yellen's last hoorah, last press conference and speech here with the FOMC statement out of the U.S. Fed hiked rates again as expected up to 1.5%, up from 1.25%, making this the third rate hike of 2017. The Fed also upgraded their view on the economy in this meeting, referring to job gains as solid and a strong labor market. Next year's growth forecast was adjusted higher, GDP from 2.1 to 2.5%, but the long term remained unchanged at 1.8%, and they're still calling for 3 rate hikes in 2018. U.S. dollar hit new lows versus the major currencies after this meeting, bouncing off that strong resistance we saw on the technical chart, moving about 70 to 80 pips lower. After that, we had the Australian dollar's job reports. They beat expectations big time, so they were calling for 18,000 jobs created last month, and they actually created 61,000. So it's a great reading out of the UK, out of the Australian economy, and we saw over 40 pip rise from the Aussie off of this, which really helped fuel the strong Aussie this week as well. Then we had industrial production out of China afterwards, met expectations, no real craziness. It did continue a little bit stronger push to the Aussie dollar, but nothing too crazy. Thursday, first of all, Wednesday, the U.S. stocks slightly lower on the day after hitting records high intraday, so not too crazy of a market move there. But on Thursday, we had the Swiss francs producer price index inflation readings, which beat expectations, giving the Swiss franc about a 20 pip jump prior to their LIBOR rate statement. This is their central bank policy meeting, where they did leave rates unchanged as expected at negative 0.75%. Swiss franc weakened further against the euro and the U.S. dollar since the last meeting, as this is something that the central bank really covers in Switzerland. So this is showing them that their safe haven currency has not been attractive of late. Their negative interest rates and the foreign exchange intervention that they've been taking part in is definitely going to remain necessary. So there's no real view of them hiking interest rates at all in the near foreseeable future, which took the Swiss franc lower about 50 plus pips off of this. They did increase their inflation outlook since the last meeting, but it just wasn't enough with how they can't see any near future forecast of hiking rates. So really saw a weak CHF off of it. Then we had the pound retail sales, which beat expectations. This was out of the last 7 reports they've had on retail sales, they've beaten 6 of the 7 reports. So it's been a really good reading out of the pound, and we did actually see the pound getting stronger leading into the report, but after the report came out, it sold off 30 pips. So that's not a good sign for the pound when we're getting good news and it's performing weak. But this was a lot linked to how the Bank of England rate statement was right after, and that's what investors were really waiting for. They left rates remained unchanged as expected. They hiked rates last meeting, and we knew that they kind of were going to do a one-and-done type of scenario. And that was very apparent this meeting, as all 9 voting members voted against a rate hike. So it was a 0-9 vote, which you don't typically see that often, that much agreement. But that shows that there's no real sight of a hike in the future. They're going to leave the quantitative easing unchanged. And the macroeconomic data has been mixed, they said, and inflation is 3.1%, above their 2% target. This is because after Brexit and the pound lost a lot of its, went down in value, pound got weak, this boosted the cost for them to import goods. So now when companies have to pay more money to import goods to make goods there or sell goods there, their prices are going to go up now because the value of the pound is so low compared to other currencies that it costs them more money to buy things, to make stuff there. So that's causing inflation to rise, but they think it's kind of peaked now, and that they're likely to have this move back to the normal target, and they think it's going to be pretty much the top here, and it's going to go down from here. So they said they're very limited and gradual, and they're going to be very limited and gradual with their rate hikes in the future. So no real outlook of a pound hiking again in the future. Then that took us over to the European Central Bank rate statement. They left rates unchanged as expected. Their outlook also remains somewhat unchanged as far as hiking rates in the future. Their interest rates are flat at 0%, the short-term interest rates. They reaffirmed rates will remain unchanged through quantitative easing, which we know is going on through at least September of 2018 at the earliest. Their GDP forecast was increased from 2.2 to 2.4% for this year, and from 1.8 to 2.3% for 2019, or 2018. Sorry, this is a substantial increase. 2019, they also increased from 1.7 to 1.9%. So this is a big hike in their expectations of growth over the next few years. And 2020, they set their expectations for 1.7. So this is pretty much showing us that they're predicting that we're at the peak right now of European GDP, and it's going to slightly gradually fall from here. But the euro did rise about 40 pips initially off this event and then fell all day after, around 100 pips or so. So initially it was taken as a good sign, but after the press conference with Mario Draghi and the investors really got to soak it in, the euro was weak on the day. U.S. dollar retail sales beat expectations, causing the dollar to rally about 30 to 40 pips, and then it continued to fall afterwards. The Canadian dollar had Polo's speak. Sorry, not adjusting this here. The Canadian dollar had the governor Polo's speak, and this actually was one of the few central bank statement reading reports that caused a big move in the CAD. Shot up about 100 pips or so in strength. And Polo's really just talking about the CAD being a strong and stable currency and how he feels really a lot of faith in the CAD, Canadian dollar, moving forward. U.S. stocks sold off Thursday as the tax reform faced some more trouble with some more Republicans announcing their no votes. But Friday, not much really going on with us news-wise. So not too much to report on, but the U.S. equities did shoot lower. They did shoot higher into record territory again on Friday. So this is going to take us into next week's news events. Again, guys, starting to get into the Christmas time here, the holiday season here. So try to be a little bit more particular with your trading, and I would even recommend after next week or half of next week, take the rest of the time till New Year's off. Study, read books, reflect on your trading, go over your journal, everything like that. But don't look for new trades. There's no reason to be looking for trades in this time of year. Okay, so starting Sunday, we have out of Australia the Economic and Fiscal Outlook, which offers us an updated economic outlook from the Australian economy and their growth forecast. This could have a slight move on the Aussie, but it's a Sunday, so not too much going on. Not really expecting much. Monday, we have out of Europe the final CPI numbers. Although CPI numbers, the Consumer Price Index, is our inflation reading, is Europe's most important inflation reading, was what they based their interest rates on heaviest. This is the final reading, so it's less important than the last reading's preliminary or their flash reading, making this event not too important. Then out of New Zealand, we have the business confidence report, and this last reading missed expectations really bad. It was actually their worst reading in 8 years, and New Zealand dollar sold off pretty hard, 50 pips or so. But last week we had that strong turnaround in the trend, and if we get a stronger reading this week, after maybe some more confidence is going to go up, now that this new government is a little bit more set in stone. They got a new head of the Reserve Bank New Zealand, so maybe they got a little bit more confidence here. Maybe that could continue this rally upwards in New Zealand. Then Australian dollars meeting minutes. The RBA statement they released 2 weeks ago, where they left rates unchanged at 1.5%. This is just going to be a detailed report on it. The rhetoric was changed to be slightly more bullish last meeting, and the Aussie dollar did get stronger off it, but we'll have to wait and see this report. This report could come back, breaking down a little bit more of that bullishness, more of that hawkishness, and possibly send the Aussie continuing higher again. But we'll have to see. Tuesday, New Zealand dollar has the current account and trade balance. Both of these are going to be exports versus imports, showing us the supply and demand for the New Zealand dollar currency. So it's definitely something worth watching. Not too crazy an event, but something we want to be aware of. Wednesday, we have Bank of England Carney speaking at the Select Committee hearing in London. He's speaking on behalf of the November Financial Stability Report, so it could cause some volatility. Definitely something we want to be aware of. Then New Zealand dollar's GDP report here is the really first tradable event, in my opinion. Monetary policy meeting minutes could be, but this is going to be the real trading event, the first one that I'm going to be looking for. GDP has been very strong, has not been a very strong reading out of New Zealand, though this reading's calling for 0.6%. It came in at 0.8% in September, which was a pretty good reading. Before that, it hasn't been very good for a while. And we should, if we see a good reading here, we should see a continuation to this New Zealand dollar strength. But if it misses again, that breakout, and strength we've been seeing could reverse very quickly and return to the downtrend. Then we have the Bank of Japan's rate statement. This, like the FOMC, they meet 8 times a year. The last meeting was the end of October, and they kept rates the same at negative 10%, negative 0.10%, negative a tenth of a percent. So this meeting last was dovish as they talked about struggling inflation and lowering their inflation forecast. So we're going to have to watch and see what the rhetoric is. Bank of Japan, we know they're not changing their interest rates anytime soon, so it's not the best trading opportunity, but we could see a little bit of a move off of it. That takes us into Thursday. We have the Bank of Japan press conference following the rate statement. Then we have CPI out of Canada. This is going to be a great trading opportunity. Their readings have been very weak as far as CPI goes, and we know that Canada was hiking their rates, but then they pulled back because they started to see mixed data. They need to pick up in inflation to justify the Bank of Canada further hiking rates at all. So definitely going to be a big report to watch. Miss here could continue that downtrend on the CAD. Beat here could see some strength return. So we'll have to wait and see. But that is an report I'm definitely going to be following closely. Then we have the U.S. dollar's final GDP. They're calling for a 3.3% growth, same as what they got with the preliminary last reading. The final is usually not the most volatile, as we already know the other two readings. This is just the finalized final draft, so definitely still worth watching, but not too crazy. And then on Friday, we've got current account out of pound, which is, again, the total of imports, exports of all goods, services, income, etc. And a good showing for the demand for the pound's currency. So this is definitely a good report that we want to watch, and something we need to be aware of. Then another big reading out of Canada with the GDP. Beat expectations last reading, and the CAD shot up very aggressively off of it. So we'll see if we can see a continuation to this beat. Maybe we'll see a strong reading again this week, and that strong CAD can come back. Or we see a miss again, and we see the sell-off out of the CAD continue to the downside. Alright, so that pretty much covers this week's news. I hope you guys liked everything. Make sure you catch the next video here where I cover the technical analysis charts for the week ahead. If you like technical analysis as much as I do, or even at all, check out the video. It's a great video, just giving a outlook from a different perspective of what I've got, an idea of what's going on this week, give you a little bit of market structure, support, and resistance in the video, and just give you a little general idea of what my biases are going into the week. This can change at any moment, but like to get a game plan situated for the beginning of the week so we know where to be looking. All right, thank you guys. Again, this is Corey Smith, Core FX. Really appreciate you taking the time to watch these videos, and I will catch you guys in the next one.